Lot of question marks always about why is it that Indian markets trade at a premium to other emerging markets. Now I thought that while this question always exists about whether India should go down because other emerging markets are trading cheap, here's some points or some thought around why India has and could trade at a premium. Now Nifty profit after tax for the index at large has compounded by 25%, 18% and 12% over the last 3, 5 and 10 years. This is from a Motilal Oswal note. So it shows that not just in the last 3 years where we have had a very strong PAT growth, but the last 10 years we've had a double-digit profit after tax growth. Not too many markets have this. GDP growth in that same period has ranged between 6 and 7% consistently. For a large economy to do this year after year is something noteworthy. Indian corporate ROE is likely to stay higher than the emerging market counterparts as per a Macquarie note. And remember, a higher return on equity means better multiples. So Indian markets or Indian corporates used to enjoy very good return on equity. It slipped a little bit in the intermediate period. It's starting to pull back, and Macquarie predicts that the gap between Indian return on equity and the other EM return on equity will actually widen in the next 2 or 3 years. If that happens, and looks like Indian corporates are on their way, then no doubt that they will enjoy higher multiples, and therefore the market itself will enjoy higher multiples. We have a stable currency, twin deficits are under control, inflation seems to be moderating, and we have a central banker who is saying that even if inflation moderates too much, we're not going to take our eye off inflation. So therefore, we do not have a very aggressive central bank, but a central bank which is very conscious of global risks on inflation at a point of time when Indian inflation seems to be coming off. Lastly, fairly strong development of physical infrastructure and digital infrastructure, more importantly. Again, not too many nations which are actually showing this combination, particularly on the digital stack. So with all of these points being there, and with global investors taking note of this, and more importantly domestic flows, it's very likely that Indian markets might continue to stay at a premium. Yes, you could argue that if global markets are trading at a substantial discount, maybe a very high premium is not warranted, but a premium is definitely warranted.